never mind. I'll record. All right, very good. So the recording is on. Cool. So guys, yeah, we're here basically and to talk about options trading. At least I'm gonna try and share with you what I do and how I do it. So what I'm gonna do is I'm gonna share my screen here, and that way I'll start with showing you the charts and basically what I look at and how I look at it. So let me know when you're able to see the screen.
Yes, we can see it,
All
Avi.
right. So what I'm gonna do is I'm gonna go to my public account to begin with and start showing you guys screenshots and walking you through how I do these trades. And you'll see the time frames and all. So this is yesterday. Tesla is one of the stocks I was looking at. This is a 30-minute candlestick chart. I got a 1-minute chart here, and this is the options, which is actually the most irrelevant part of it. But basically, a quick background, where it's white is when the market's open between 9:30 Eastern and 4 p.m. Eastern. When it's gray, it's post-market and pre-market. So Tesla basically had come down on this day, found a bottom here. When it was closed, it bounced a little bit, but on the next day, it found that same bottom, same area around 161. It closed up here, and then in the pre-market gapped up. So it closed here, basically post-market, and pre-market opened here. So it's strong, basically, overnight. There's lots of news that came out and whatever. Over here at 169, it found a top in the pre-market, and then about an hour and a half before the open, it jumped up. And I figured, okay, this thing is basically strong. Everything is telling me it's strong, all the way from 161 going up. I was thinking maybe 172 might be a good place for it. And like a target area, 171. This was the high of 2 days ago. See that red line there? So that's a possible resistance. But if it's really strong, it has a chance to break through and head up to the next round numbers. And I have another line up there, which is further back in the chart where that was resistance as well. So I had this area in mind as a target. I figured at the open, it's just before the open, it's opening around 170. Before the open, like this, the 1-minute chart, you can see where it's about to open, right about there. So 170, I figured it's going to come down to 169. If it starts to bounce from here, I'm going to try and go long, buying some call options and sell those call options as it gets to 171 and 172 in this area. So check it out. Here's the 1-minute chart. It came down from the open from 170. It did hit 169. It started to bounce a little bit. It was just indicating some bounce. So what I did is I went long here. I bought the call options, the 172.5 strike, which is, basically that orange line. And it's the closest expiry, which is Friday. So this was yesterday, trading on Monday. Closest expiry is Friday on these options. So I got in expecting that it's going to hold 169. It did not. As soon as it started to drop below 169, I got out. So you see that? I got out very, very, very quickly. As in, I was in and I was out within maybe 30 seconds or 20 seconds. The whole thesis of the trade is that it's going to bounce off of 169. It began to bounce, but if that bounce fails, if it drops below, the thesis is no longer valid. So you got to stop out. That's why the stop is so tight. So in and out when it dropped below. So I'm actually looking at this chart, but when I click the buttons to buy and sell, it executes my orders on this, which is just options charts, options chain, which I'm really not even looking at the chart. I just put it there as a screenshot. I'm looking here. After the market opens, I'm looking here. So getting in, getting out, turns out this was $1,000 loss on this one attempt on this trade. And it looks like John Paul, we lost him, but there he is. He'll be back in the room. All right, so this was...
Do you do the exit by automation? So you have a pre-order there where you exit and then it's executed, or you do it manually?
I do it manually because you can see it's really fast. Look, all of this is within 2 minutes. I was in and out. I mean, literally, it was within seconds. By the time I type in the order, the stop loss, and all that, it'll already be gone. There's no time to type it in. When you're trading at this speed, when you're trading minute to minute, right at the open, when there's a lot of volatility. So I have these hot buttons already set on my software. I just click it, it gets me in, it gets me out. Percentage of
Very
share.
fast, basically, yeah.
Yeah. So I do it that way. So that's one trade yesterday. That was a failed attempt. Another one yesterday was Amazon. Now, Amazon was interesting. It had the same kind of setup as Tesla. The previous day was really weak. It found a bottom. This black line here is where the price closed. And then after the close, it held above the closing price. Then it gapped up. And again, in the gap up, you can see the consolidation, the resistance of the consolidation. So I drew my orange line there, which was here about 175.6, right about there. And an hour and a half before the market opened, it jumped up above that. and then it bounced that level again. So I'm thinking this is possibly strong, but I'm not sure. I'm only going to go long again if it's above the consolidation. Same thing, if it comes to it and bounces off it, I'll be going long. So look what happened here. It opened here where the black line is, or green line, and it dropped right away. It dropped my orange line. That's this one. It dropped, it found a bottom around 175, found some new buyers, and then it pushed up again. Once it closed over here above my orange line, now my thesis becomes valid. Basically, it's holding that as support. And what gives me even more confidence is that now it's going above this dark line here, which is the opening price. Now, the opening price is always a significant one. I'll get to that in a minute, which levels are significant. So that's when I entered. After it claimed my orange line and it started to look strong from there above my dark line here, I got in on the trade. And my stop loss was actually very tight, right below my dark line here. That means my thesis would no longer be valid. It's holding the opening price. If it drops the opening price, I want to be out of this. So again, it's very tight. I could have been easily stopped out within a minute or within 20 seconds or something. Could have, just like the Tesla one. But thankfully, this one didn't stop out. So I got in right over there, basically, and it pushed up pretty quickly. But it struggled. It struggled here. And then as I saw it struggle, this candle closed. Within the next candle, it was just same thing. Within about 5-10 seconds of this candle opening, it was struggling to move anywhere. So I started exiting my position. That's me taking partial profits. So 10% or 20% at a time of 20% of my existing position, starting to sell the contracts. And it came back and bounced off my line. So that gives confidence. Again, it bounced off my line. So that gives confidence. But it's also struggling to break out from here. There's a lot of resistance right here. So that's me scaling it out as it keeps hitting up here and not breaking through. If it breaks through, that's great. I'll hold it for a further move up, to 176.50 up in this area, which is basically the red line up there. So this is a momentum idea where in options trading, if you're going long options, what's really important is time decay. You gotta make sure it moves very quickly in your favor. Otherwise, it goes against you. And this is a good example. Look at that. Over here, look at the tops of these candles. They're all about in the same place. But look at the tops of these candles. They're getting lower. It's actually going against you, even though the underlying is in the same place. So you gotta exit. Now, if this was a stock trade, just an equity trade where I was getting in here, buying this equity at about 178.50, 175.80, I could hold it as it's doing this, and then it goes later. But if it does all this and I'm in an options position, I have to start exiting. There's no opportunity to hold it because time works against you when you're going long. So sitting there for 3-4 minutes and it's not working, eventually I just got out. I took a lot of the profits out here. This was maybe 80% of my position was gone. And the rest of it I got out break-even price, which was, I think, this candle right here. You can see how this candle, the low is quite high above the black line. But look where it is on this chart, how it maps out. So options, the key thing in risk management of options is that it's got to move fast. And so the way I cheat the system, basically, is I trade the opening volatility. See these moves right at the open are very volatile, very fast. And these are 1-minute charts. Compared to like later in the day, it moves a lot slower. And then going long options becomes a more difficult challenge. So I like to make sure it happens fast. One of the things I do is trade right at the open, the first couple of minutes of the day. So like this entry was in the 5th minute. This was the first candle. This was our 6th minute. That Tesla one earlier, that was the 2nd minute. So this one, even though it didn't work out, go to my target, I still made some profit. This turned out to be about $1,500. And the previous loss was about $1,000. So, it adds up. Let's look at another one on the same day, all yesterday, Apple. Apple was interesting. Similar setup again. It was weak on the previous day, found a bottom, closed pretty strong, and just kind of sat just below the closing price in the post-market. And then pre-market, it opened way up here. It gapped up. And it started bouncing off of the previous day's closing price, which is very interesting. So bouncing, look at these wicks, bouncing. About 2 hours before the open, it shoots right up and it holds above the high of 2 days ago, this red line. So this is interesting. Now I'm thinking, basically, it's a very nice pattern. Came down, found new buyers, found lots of support lines, one here, next one here. And now before the market opens here, the buyers are just pushing. There's no sellers taking charge. The buyers are in charge. So I'm thinking this could be good, going up to 177. And on the order book also, I was seeing there was plenty of orders sitting on the order book at 177 on this day. So I had the idea that this could be a long, but I'd like to go long from here. If it opens and comes down, starts to bounce again like it did here, that would be good. Otherwise, let it open and let me see what support it's able to hold after the open, what it shows me, because it doesn't necessarily have to come and bounce from down here again, which was that high over there a couple of days ago. So anyways, it opened there, watched it for a couple of minutes. So in the fourth minute, this was a hotkey mistake where I hit the wrong button and it got me the equity, which I just exited right away. So it was in this area, let's say about 5 minutes in, where I decided I'm going to go take this long because, again, my dark line here, that's the opening price, right? The first transaction of the day. It messed around with the opening price, these two candles, and the third candle it held above. This is where I got conviction. Once this candle closed and it was bouncing off opening price, I realized, okay, I can use the opening price as a risk management. So this is right below it. And I can take an entry in this area going up for 177. So if you look at the 30-minute chart, it's like you're entering right in here, going up to 177. So on the options, again, I went long these call options. That would have been right here in this during this red candle. And the stop loss was right below. So if this dropped here, I'd be out. Basically, I'm looking at this. If this 1 minute price action dropped below the opening price, I'd be stopped out. In this case, it would have been mapped out on the options chart, which would have been, a little loss over there. But yeah, so it moved right away, but it hit this resistance by 176.35 or so. And as soon as it hit that, it struggled to go up further. It was already dropping very quickly. And that's me exiting as it's dropping, as the momentum stalled. And good thing I did exit a lot of my position, perhaps 50% of it, because look at that. There were sellers sitting here pushing it and it was struggling to go. Really struggling. And again, holding options for a long time, it just goes against you. Now, if you look at yesterday's chart, it did eventually hit 177. It did go, but it did it maybe 15 minutes later, in which case the options I was in here would have been down here somewhere, which I wouldn't be able to hold. It goes against you. So,
Sort of time decay, yeah.
yeah,
There's a lot of time decay actually in such a short term. That's amazing. That's
yeah.
weird.
Yeah, well, the thing is, you can tolerate time decay if you're doing smaller size, but I'm doing like 150, 200 contracts. So the risk levels are like maybe a $2,000 risk on the trade, where if I enter here and I get out here within a couple of seconds, it's like that. But the reward side is 3-1. If it really goes to 177, you can see the reward side might be $8,000 or $10,000, something like that. So again, this one, same story as the other ones. I got out based on the lack of momentum or loss of momentum. And then I kept exiting bit by bit as it was kept going up, but stalling, kept going up, but stalling. If it broke through, I would have held it. I would have definitely held anything that I had left. Eventually, these two dojis here, that was it for me. I was like, this thing is struggling. It may go, it may not go. I don't know. I've been holding it already now for 10 minutes? That's longer than I'm used to holding it. And I'm done. It's right there. So even though it didn't work out, it still made some decent money, almost $2,000 there. So it was like a 1-to-1 kind of trade in the end, even though you plan for a 3-to-1 asymmetric risk to reward. But you can see the risk management side of it is so important. If it's not going to work, you get out with whatever you get. And like on the Tesla one also, if it's stopping you out, is going to your stop loss, you have to accept the loss and then move on, look at the next one. So you can see in the space of 15 minutes yesterday, I took 3 different trades. Apple, Amazon, and Tesla. In the end, it was a profitable day. But none of the trades worked. None of them worked. One of them was a stop out. The other 2 didn't go to the target. But because risk management is so tight, like incredibly tight, then you can come out with a profit. You can squeeze out a profit on a daily basis. And again, now on options, what's interesting, this one I did it yesterday on, I think it was a $85,000 or $80,000 account I used. So it's like a 2%, 2.5% on the account on a day that didn't work. On a day that worked, it would have been $10,000 made on that $80,000 account, which is a significant return within a 15-minute time span. So, that's the beauty of options. And again, this is an example of a day that didn't work. I'll show you some more that did work and how they really do come out really, really strong. But for now, you guys have any questions about how this is or the details?
I notice your VWAP indicator, but you haven't mentioned it until now. Where does this come into play in your strategy?
Yeah, that's a good question. VWAP is interesting. It's the only, you could say, moving average I keep on my chart. It's not really moving average, it's more a volume indicator than anything else. It does come into play significantly with the way I trade, because I trade right at the open. And right at the open, the first minute always has a tremendous amount of volume, and then it always dies off. So when you have tremendous amount of volume, the VWAP comes right to the price. So I'm using VWAP as support or resistance, just like a horizontal level. And on the bigger scale of it, the whole thinking is these big prop firms and hedge firms and all of them, their performance is based on VWAP. If they're able to sell above VWAP, they're considered good performance. If they're able to buy below VWAP, they're considered that they've done a good performance. So it is actually a significant indicator to tell you where big money is playing, where volume is playing. Same thing. Lots of volume is happening, average at this price on the day. So it averages out for the day. The VWAP I include the pre-market action. You can set up VWAP so it only has the action after the market open. But you can see I use the pre-market action quite heavily to plan my trades and directions and support resistance and all these things. So yeah, it does come into play. Now, later in the day, if you're trading 1-2 hours later, where the price has gone from the opening price and gone to another area altogether, it may be far away from VWAP. And at that point, you'll be taking maybe a reversal trade where it's reversing and going back to VWAP. Those are slower kind of intraday trades. Lots of people do that stuff, but I don't have the temperament for that. That's too slow for me. I get bored. I get anxious. I need to get in and out and use leverage, and it's a personality thing. And it's funny, with all the mentees I work with, they always ask me, teach me your strategy. I tell them I will not, or I can teach it to you in 5 minutes, but you're not going to get anything. The truth is, in something like this, you gotta first identify your personality traits and your tendencies, your emotional tendencies, and then make that the centerpiece of your trading style. So temperament comes into it, patience comes into it, risk management, discipline comes into it. Like all this stuff. I mean, I've done webinars and all about this, and courses. I'm doing one tonight also. I'm doing another webinar. It's that's really how you find your style. Like I found this style. This works for me, is I like to be very efficient with capital. I don't want to keep $500,000 in the account just to be able to trade $2,000, because if you're doing equities and you're buying NVIDIA at a $900 stock for a $5 move, well, you need lots of buying power, to get 1,000 shares. I'd rather downsize a day trading account, maybe $70,000, $80,000, and kind of keep it there. Because then I can actually take big size with the options contracts and leverage. So efficiency of capital, that's what I'm saying. So that's my thinking. That's my personality. Because I have other things I'd rather do with the capital. I'd like to put that into these asymmetric investments and all these other things. But that's not for everybody. So some people, they can't handle leverage. The moment they start using leverage, it screws them up. They get emotionally volatile, and they're more volatile than the market is. And then it's decision-making process goes out the window. So personality has a big piece in it. And I've been trading for quite a few years, and my style has evolved quite a bit. Today, this is what it is. This is only today. And 6 months from today, maybe something completely different. But we'll see. We'll see how things evolve. You got to kind of try and be self-aware as much as you can. So let's see some from a few other days prior. Here, this was March the 7th. Let's see what happened on this day. You can see I got busy on this day. I took a lot more trades. Check this one out. Tesla. I was looking at Tesla on this day too. Look what it did. On this day, the previous day, it was weak right at the open. It found a bottom here, found buyers at around 174. Went right back to the opening price. Look how significant it is. And then rejected all the way down. And it closed right about there, where it found some buyers earlier. Anyways, point is, after the close, it was weak. It dropped the previous day's low, which is a significant thing I was looking at on this day. Once it dropped there, I'm thinking this could be weak. But then very much so, within an hour and a half, it reclaimed that low, yesterday's low. And then look at this. It bounced off it right before the market opened. That's here. Look at the 1 minute chart. The bounce happened like 4 minutes before the market opened. Right there. And it's just about to open. Now it opened here just above 174, right about there. So after watching what it did, basically here and here, you can make a plan that if it at the open bounces off of this yesterday's low again, there's an opportunity to go long. using yesterday's low, the red line, as risk management, meaning your stop loss is right below it. So you enter in here, stop loss right here. Imagine the risk to reward you get. It's like 10 to 1. So that's really, really good asymmetric risk to reward. So as I traded this one, I did not take that entry as it bounced off. I waited for the candle to close above the opening price. I was being a little conservative because I had also 175 in mind as resistance. You can see where it was an area of interest. So I was like, let me see if it's going to be strong above 175. It can bounce here, but there's a risk on this side of it. So if it's going long from here, if it's strong, then I can get it. I did manage to get in. I did get in just above 175, stop loss right below it. And my target was up in this area. My primary target, though, was this black line because that is yesterday's closing price. Again, very significant level. The previous day's closing price is very, very important. So as the move there, I started to exit. I wanted to exit, I remember 70 or 80% of my position, but I made the mistake of exiting the full position. You can see how it got messy here with my execution. I hit the button too many times. I exited. I ended up short for a moment. I had to close it and all that. So it was a bit of a mess with basically using the software the wrong way, hitting the wrong buttons. Now, even though this only gave me, let's say, 3 to 1, where I planned like a 5 to 1 kind of trade, it still was a $6,000 trade. And this too on like a $70,000, $80,000 account. So just on that one trade, you can see the reward is pretty good. Now, if you're not as stupid as me as hitting the wrong buttons, then this would have been $15,000, This would have been amazing. You hold it up to 180, which is a significant level up there. You can see it on the chart. 180 was an obvious target right there. So yesterday's or the previous day's opening price. Again, significant, right?
So normally your practice to exit, Avi, is to in this case, to do it in tranches, right? So you would have a first tranche, second tranche, third tranche, or how do you deal with that?
Yeah, so what I like to do, I have my primary targets in mind. And at the primary targets or most significant targets, my significant targets, I like to get out about 80% of my position. Now, on the way to that target, if it's stalling, I'll start getting out 10% at a time. I'll keep hitting the 10% button to keep selling 10% of my remaining position. So I'm scaling it out, but I'm doing it based on the price action, based on the momentum. Because I cannot afford to let the momentum go against me when you're trading options. Because you see this one, look, this thing moved, but if it didn't move, it wouldn't be like this. If it was just flatline, like you saw some of the other previous charts, like Apple, it would have actually gone down. And then you're in a red.
Time decay kills you basically, yeah.
Exactly. But it works the other way. If it goes double with options, especially if you have the right strike price and all that. So this one, check it out. The strike price was 177.5, which is about here. Now, what's beautiful about it is as the equity price goes to the strike price, the options actually doesn't just go up alongside. It accelerates proportionally. It goes up more. It's the gamma calculation in it. One of those Greek.
Yeah.
So that's why I picked a strike price that is my primary target price. So in this case, I was getting it around 175. I figured if it can get it to 177.5, that's a big one. That's already a big move. And anything beyond that would be a bonus. And I was confident it would go there, even though I knew this was pretty serious resistance here. So I knew I could get out maybe 70% here and then let the rest of it accelerate up to here, up, 177.5 area. And I'd probably get out and I'll have only like 5-10% of my position left if it runs to 180. That was the thinking on this one. And you're basically taking advantage of gamma. That would be ideal. I couldn't get the strike here at 176 because the next option was 175. So I went with that one up there. And I was like, it can go without too much fuss. On this day, it did. So again, proportionally, options move a lot more than underlying. That's the beauty of it. But if you want to take advantage of this, you got to have serious risk management. I mean, mine is like within seconds of price action movement. And also not just stopping out, but it's also watching momentum. If momentum is stalling, I'm out. It may go later and I may have missed the day. It's okay. I'll come back tomorrow and do it again. No big deal. So like on this one, again, the power and the beauty of it is like it should have been a lot more, but it was already quite a significant day with the $6,000 yield on this one. Now on the same day, at the same time, here, NVIDIA. Oh, this one was fun. I remember this. Trading NVIDIA is crazy. NVIDIA on the previous day, again, it was really a messy kind of price action. It made a high there, it closed there. Now in the pre-market, it broke the previous day's high. That's the beauty. And so I'm thinking, okay, it's strong. Again, once it breaks yesterday's range is basically this whole thing. Now it broke the pre-market, in the pre-market, it broke yesterday's high, which is telling me, this is very serious support, yesterday's high. And so it's consolidating here before the market opens. We have 900, great big number. Now that's beginning to look like support. So I'm beginning to think maybe it may want to test after the open. It may want to test yesterday's high. It may not. If it doesn't, there's still an opportunity to go long from 900 because that's holding in the pre-market and we know it's a big round number. There may be buyers sitting there waiting to buy when it drops and then run it. So I was looking in this area for an entry for a long. I was never thinking short. So as it opened, this was really fascinating. It did go to yesterday's high. It did drop down to that level. And look at that, 1, 2, 3, 4 minutes. It kept buying up. Look at all these wicks. Very significant. This price action is incredibly significant. It's telling you that there are major buyers sitting here at this red line. A lot of buyers, and they're very powerful. And look, every time it drops, it gets pushed back up very quickly. For the first 4 minutes, that's all it did. And then eventually it did close, well, it did push through 900, which is the level I was looking at. And again, significantly, it pushed through the opening price, that dark line there. Now, that dark line is only drawn on the chart after the open, as the first transaction happens. So I use that as a very significant one with the way I look at things.
So look at the volumes, right? I mean, because the volumes were also going up here. This one you just showed, yeah.
Oh, yes, absolutely. Volume, to put it very simply, the way I treat volume is you got to think of a boxer. A boxer can go and punch the other guy, but without any strength, the guy's wrist will just break. It won't deliver any power. Volume is the power. You knock it out, but with strength coming from the shoulder and the hips and everything. So if it's pushing through levels with volume, you think of that as strength. You have more conviction that it's going to hold above those levels. Same thing. So very, very simplistic, and it works at least with the way I do it. So keeping it very real, very simple. So yeah, this was very significant. I didn't even wait for this candle to close. As it was just about to close above the opening price, above 900, and finding all this buyers. By the time it's here, look at the amount of confirmation you have. Like so much conviction that this is going to run on top of all of this stuff from the previous day's action and the pre-market action. And so there's me taking an entry right about there, stop loss right below the level. And I'm looking to run this thing up to about 910, where I saw significant orders sitting on the order book. That's the order book there. It's kind of under the screenshot. But you scroll it out to 910. I remember on this day, there was lots of sellers sitting there. Liquidity, basically, area of liquidity. So I was looking to get there. And as soon as it started to stall below that, I was getting out. And look at it. The strike price I picked was 910. It says right here, 910, because that was my target price. So entering here, stop loss right below. Look at the risk to reward. Again, this is at least 3 to 1 or 5 to 1 or something. So entering here, stop loss is right below basically where you enter, and it goes. And I took a little partial here. Maybe this was, I think, 10%, 5% at, what was it, 905. That's around number 2. And you can see where it went up and it pushed down a little bit. I started to scale out. But then it broke out of 905 very quickly. So I didn't scale out until it really started pushing into 910, which is right here. 910. That's me getting out at 910. And that was it. That was the whole thing. Just getting out the whole thing. So this was another example of one that worked very nicely. And that yielded, what, about $4,000 on that one.
The entry of your trade here was a bit later than the open price of the start of the trading action of that day, or
Yes.
not? Yes. And your close was below this open price, and your stop loss.
Yeah.
Below the.
Yeah. The entry was just above the opening price. Close was just below. Sorry, the stop loss was just below.
The stop loss was just below. Yeah. Okay.
Now, ideally, you wait for the candle to close above whatever level you're looking at. So in this case, I should have waited for this candle to close and entered when this candle opened.
Okay. Okay.
More confirmation, yeah. But I already had so much confirmation that I wasn't too worried about that point. Now I'm just ready to get in, put the stop loss really tight and go. And I could have actually added.
Gotten in sooner, no? Couldn't you have gotten in sooner, even if it's breaking like the upside there above the VWAP? Yeah.
You see, the thing is, there's 2 things on risk management. One is the number of dollars you put at risk, as in where's your stop loss. And the other is the confirmation of the trade, the conviction that you have that it's going to go. So I like to calculate both. And confirmation of the trade is really important. That's basically probability that it's going to go in your favor. And waiting and not entering anywhere in this area, that's giving me more confirmation, because if I enter long here or even here, I still have to get it through the opening price.
Yeah, yeah.
I wanted to really push up, and then it's just open skies above it.
And you wanted to see it close also above this open price, ideally, then.
Ideally, yeah. But this one, so you can say I was a tiny bit early. I was like 5 seconds early in the entry. But this one, I don't mind it because it was so. I mean, the day I was trading on, I remember some people were getting in here, and some people got stopped out here in this area.
Yeah, yeah.
But you know, if you can hold and get in and all that. But I like to wait for confirmation, and then I like to put on some decent size and go.
It's also a thing about choosing the right options then, because your strike price is also important. That depends on which key target levels you have in mind, I suppose.
Yeah, it is. So, I mean, the thing is, basically, you take any strike price in this $900 range, and you take this trade, it'll work. I'm just trying to give myself an additional advantage by picking the strike price to be my target price. And in this case, there was a 910 contract available. So I picked that one. And there was plenty of open interest. So liquidity is not really a problem. You can get in and get out. You have that problem with other stocks where you can't really trade those contracts like this because there's just not enough open interest. They're just not moving. So again, that's one of the reasons why I trade only these top 7 or 8 tech stocks. That's the only thing I trade. Just Tesla, Nvidia, AMD, Apple, Google, Microsoft, whatever, these, Amazon, just these. Because the options are very active and they expire every Friday. So I just take the earliest expiry, because the closer it is to expiry, again, the more it tends to move. And I'm doing day trading stuff here. So I'm trying to capture these moves. I don't want something that's going to move slowly. You have to wait for a month for expiry. No, it's going to expire in a couple of days. Try and capture the move every day, get a piece of it. And yeah, that's the whole thinking behind it. So yeah. So that's the Nvidia one on this day.
How do you pick the underlying, Avi?
Oh, yeah. So the underlying, I pick it based on price action. And I look at the 30-minute chart.
You look at 10, 15, 20 underlyings or more even. You have automized screening where
right? Yeah, just the top 8 tech stocks. That's all I look at. That's my watch list every day. Just those 8.
Because highly liquid, yeah? You want to have liquidity, basically, yeah?
Well, for a couple of reasons. One is for the last 5 years, they've been very active day trading wise. And also for me, particularly, their options are very active. There's a lot of open interest. You can actually trade in and out of these options within minutes without having trouble of getting filled or a bad spread or anything. And they all have options that expire every Friday compared to something like maybe Boeing, which will expire end of the month. It's kind of hard to trade that, or some other less liquid stock, or there's less open interest in those stocks. So, I mean, this sector has been in play for since 2000, basically. So now when this changes, let's say in a couple of years, tech crashes and energy starts becoming a big thing, and I'll be trading in and out of oil tankers every day, options, whatever it is.
But you look for volatility, basically, yeah? I mean...
Yeah, well, volatility and, well, volatility is not even like the word because it's fun. I'm looking for liquidity on the options side, options open interest, and I'm looking for high relative volume on the underlying. Now, relative volume, let's put it this way. In 2005, this thing would have been trading maybe 1 million shares a day, for example. Today, this thing is within the first half an hour, it's already trading 4.5 million shares. So you can see the relative volume is massive. So it's in play. There's a lot of people in it. There's a lot of hedge funds, algorithms. Everyone's in this. Everyone's in this. And it's not just AMD here. It's the sector, this whole tech sector, which we know all about for the last, I don't know, 10 years. It's been trading. So for now, this is all I've only been day trading about 5 years, and all I've ever traded is this. Now, the other way to do it, a lot of guys do it, is they watch the news overnight or just before the market opens, and they start trading those stocks. Like Boeing had another crash, the price is volatile. So then they'll go into the equities on that, and they'll go long and short within the day, just like this, looking at the 1-minute chart and getting in and out. Or Nike had an earnings release, or FedEx had another piece of news, or whatever. So they're doing that. And a lot of guys in the trading room I'm with, they're doing that stuff. Me personally, I don't like that. Now, that's too much volatility. Now, that is what you're saying, volatility. That's volatility. I don't like that. That's too much. I can't have it.
You want structure in your trades as well. I see you're looking at candlestick patterns and like really technical setups as well.
Yes, for sure. So I like it that it's regularly respecting levels that I can rely on from the previous couple of days, as compared to something that just gaps up 5% overnight because of some news or earnings release or whatever. And then there's no structure. Then it's just volatility at the open. You're trying to scalp that volatility, which to me is too much. It's too much risk. Again, a lot of people I work with do that. I used to do that, and I switched to doing it this way, because this way now options and structure.
I remember the trade you showed me on the bus where you had like a clear head and shoulders pattern that you short. Like you put a short trade on. That was a really nice one actually, because a really nice structure, clear levels, and it's a very technical trade that you can easily spot and execute on. And they tend to hit their targets, especially on shorter term frames.
Yeah, exactly. So those pattern structures that respect levels, exactly, is what makes it, for me, makes it less stressful, makes it easier. You know, nice and simple. And something to be said for these levels. Now, if you notice, I'm using very recent levels, yesterday's highs and lows and yesterday's closing price, 2 days ago's highs and lows. The reason is because just think of human psychology, think of trauma. What is trauma? It's basically anything that happened really recently and was really impactful. You will remember that thing that happened yesterday that had a big impact on you. So it was recent and it was something profound. So you'll remember that more than you would remember something a year ago. So you know that will be respected much more today than something a year ago. Same thing. I'm looking at these levels as trauma. Look at this. This thing at the open on this day popped up and it got shot down right away from about 215, yesterday's high. So this was recent. It was yesterday. And look at the trauma. It didn't even have a chance to go anywhere. It just shot right down. So I know this level is being respected. So today, if I'm interested in going long, I'm using that as a target. That's why I can.
You're always going long, basically. You go long calls and long puts, or is it that you also sell? You don't sell, basically.
I don't sell options for the simple reason, like I was saying, efficiency of capital. You need more capital, more margin requirements and all that when you're selling options. I just go long. If I want to short the stock, I'll buy the put. If I want to go long, I'll buy the call. This one, this is a call option right here on this trade as well.
That's why the time decay is working against you, basically. Yeah, it's you have to manage the time decay. I understand. And can you say something about payoff, rentability, profitability, basically, and drawdowns? I mean,
so risk is, well, okay, let's talk about payout side. For example, here, what's on the screen, this was close to an $8,000 day. This was on about $70,000, $80,000 account. So pretty good return on that.
10%, yeah.
Yeah, within within 15 minutes of trading. On the other side, now we can risk your whole account on the day if you want to. Me, I don't. The maximum I may risk is perhaps 5% of my account. Like on any given trade, I may risk perhaps $3,000-$4,000 of the account. Oh, well, $3,000 or $4,000, basically. That's it. Looking to come out with more than $10,000. So looking at 3-to-1, 4-to-1, something like that. So now that's very personalized to everyone. A lot of people say you should only risk 1% of your account on any trade. Well, it's up to you, really. What you don't want to do is blow up your account. That's obvious. So again, one of the tricks I do, one of the way I cheat the system is basically I keep a small account. I move cash out of that account.
Yeah, you have reserve money, so it's a smaller portion of your total wealth, basically. Yeah.
Precisely.
If something goes wrong, you can restart again.
You can blow it up. You can refill it, basically, if you want.
Yeah. Well, if something goes wrong, I shouldn't refill it right away. I should figure out what goes wrong, and then maybe do some exercise and do that. So I don't have a problem risking 5% of my account on a particular trade because I'm keeping a small account to begin with. So if I have all my wealth available at my fingertips on my keyboard, that's dangerous. So, and you see how fast this goes. Within minutes, I can blow up $100,000 without even thinking about it, and I have done that. So I'm not recommending you do that. So just having less available at your fingertips, you have less to blow up. Also, on the other side of it, I'm using margin and options. Like, look at the amount of leverage I'm using. That's why I'm able to get these 10 or 15% or sometimes 20% returns on an account within a 15-minute time frame.
How much of your margin requirements do you have a limit for yourself? Basically, how much you would like to use of your available margin?
Sometimes I use all of it. All of it. Let's say, because the broker gives me, I think, 4-to-1 or 6-to-1. I don't even know. Like on an $80,000 account, I can buy maybe $250,000 worth of anything, of options, let's say, of contracts. Sometimes I'll do that. I'll buy 500 contracts, but then hold it for 3-4 minutes and get out. Sometimes I'll do that if I have conviction on the trade. So I have no problem using margin, even with options. But I do have a big problem with using margin overnight. So all the investment portfolio stuff, I will not hold it on margin. That's purely cash. Whatever cash I have, I can put that. That's why, again, I keep a small day trading account and I'll leverage the heck out of it. But long-term investments, no way, man. No way. I'm not going to do that stuff. I don't want to get margin calls or all the uranium and all that stuff we invest in. It's heavily volatile. You can't hold that with margin.
Margin, yeah.
Yeah.
Would you mind showing that Microsoft trade that you also had that day, or don't you
Yeah,
have any information about it? Because I see you risked
yeah.
a larger size amount of your account there.
Yeah, so let's get into that. Just real quick on this one on the screen. Again, got in, got out quickly because you see the momentum dying. It went up, got shot down. That's getting shot down. That's why I exited quickly. Again, risk management. It didn't go to my target, which was 215 up in this area. So that's why the exit. Even with the exit, it was still about 2 grand. So that's risk management. What have we got here? Yeah, Microsoft. Oh yeah, I remember this one. Okay, so look at this. This is interesting. In the pre-market on this day, look, it rejected this level where I put 406 approximately there, was weak from there and found a bottom here. And then again in the pre-market on this day, it rejected from there. And again in the pre-market rejecting from there. And I had the bright idea that when the market opens, it's not going to reject, it's going to go long. It's going to break out from this 406. So I got ready to go long on this thing. So as the market opened, it opened there and it was 406 is my level. The black line is the opening price as well. So all of it's coming together in one area. I'm watching it for a few seconds, maybe 20 seconds or so. And I'm seeing it's holding above here, holding above basically the orange line and the opening price. So I'm like, now I get excited. I get in, my stop loss is right below, right? And I get in heavier than I should have. Turns out 10 seconds after I get in, it went against me. And just because I didn't hit the stop loss trigger quick enough, I was 5 seconds late on it. It kept moving, went down there. So you can see how deep my stop loss was. So this really should have been a $3,000 risk. It was close to $5,000 because I was just a little slow on the button. And that's a psychological thing. Mostly that comes from marrying the trade. You can't marry these trades. They're girlfriends. You have fun with them and you let them go. You can't marry these things. That's trouble. You'll get beat up like this. These are stop losses. So you got to respect your stop. So a lot of times when this stuff happens, you're holding past your stop. Most of the time it's because you fooled yourself into the trade. In this case, I did. It was clear resistance for so long. The obvious trade was to go short at the open. Look at this short. It would have been a beautiful short. 406 to 403. I mean, this is a $10,000 trade right here. Just buy the put option and go. I went the other way. I don't know why. My head was not in the right place that day. But, so it took that loss, but the other trades, okay, they worked out and it was a green day.
I noticed you opened your trade very quickly there. Like you didn't wait for any confirmation of levels. Like you entered like in the first candle already. That's not something you've been doing in the other trades you've shown.
Yeah, this was a really fast one. As again, you can see I fooled myself into this. See, it's such a psychological business. I had it stuck in my head. This thing is going to go up. That's all. It's going to break out from serious resistance. So in 10, 15 seconds or 20 seconds of its holding, well, over here, holding above my level, I entered. I should have waited. And what I should have done is plan the short. And if it dropped right away, I should have entered in the first minute. Maybe perhaps as it closed below VWAP right there in this area. Maybe as this candle open.
Yeah, that's the safe trade, I think, yes.
Yeah, enter here, stop loss right about at VWAP, and off you go. You get 3-1, really good trade. On the other side, if it was going to be a long, I should have waited for it to close above, retest, and then run this thing long for 408, 410 or whatever. So you can see this one, I absolutely fooled myself.
It's really interesting to look at these trades as well, because you learn even more from the ones that failed, actually.
Absolutely, yeah. That's what you can see, like on my public profile. I mean, every trade I do is out there, red or green. It's all out there every day. So this one, I mean, the thing is, here's the fun part, risk management, right? Even if you're absolutely wrong on your idea of the trade, you still have to stop out. I mean, you have to, otherwise it goes against you. You can't hold these things. So risk management. So if you're wrong, you should lose $1. If you're right, you should make $3 as a minimum, asymmetric. So you can be wrong many times and still you're profitable. So, but you got to really get used to that. Now, that's hard to do because you know, the market moves so fast. You're doing this 1 minute stuff. You become emotionally volatile just getting exposed to the screen like this. And then you hold past your stop like I did in this case, or you do all kinds of silly things. So it's really, really important to understand that asymmetric risk to reward. I can't tell you how important that is. That even if you're completely wrong and you have no clue what you're doing with the market, you still make money. If you can have that asymmetric risk to reward with just a 50% win rate, you still make money.
Avi, could you put this theoretically in written rules? I mean, you're following certain rules, so you should basically. And if so, then it could be in principle automatized. I mean, I could imagine that the big guys, are you doing it manually? Basically, you are writing it, but they're an autopilot. I mean, is this happening already in this field? Or I'm
Yeah.
asking because I'm at the Trade Automation Toolbox. I don't know if you know that, but I think I sent you yesterday. Probably I did or did not. So.
Yeah, no, Fred and I talked about this a little bit. Yeah, you know, there are some rules that are simple to write down. Like if it keeps rejecting the same level 3 times on the 30-minute chart, okay, so it's going to reject again, go short, for example. But okay, what's easy to write down? You can write down the levels, the horizontal lines, they just stay there, they don't move. But what I find difficult to write down is price action on something like this, because the entry in the end is based on the 1 minute chart and the confirmation of the price action on the 1 minute chart with the volume. So I'm really watching this thing volatile, like super moving in a volatile way at the open, the first couple of minutes. And it's kind of like watching how the candles are forming. I'm not sure how to write that down. I'm watching, okay, does it look weak? Does it look strong? It's like watching a sports game, offense and defense, who's winning, who's in charge. And it keeps going back and forth. Then you flip over to the other side, the side that's winning. You flip over to the other way, that's winning. So, I mean, that's the way I see it, like a football game. But I'm not sure how to write that down. Like writing down levels is okay, but writing down price action, I mean, what's going on the ticker tape? How would you write that? I don't know if you
So
have ideas.
basically, you don't have competition from the machines here because there's a human element that can be replaced. That's a good news, basically. Yeah. So
Well, you know, the machines, I try to watch what they do and flow with them. You know, that's what the volume stuff is. That's what's watching the tape is. I mean, look at the tape here on this print right here. You got the white print. Look at the volume. This is massive at 403.60, right about there. What this is telling me, this is a print in between the bid and the ask. It's within the spread and it's a massive size. This is obviously some machine or a massive hedge fund taking on big size. Now, we don't know if they're buying or selling. We know that they're printing in between the bid and ask. And if you look at the price, look what's happening. It's going anywhere. It's just sitting in this area, which adds up very nicely to what's happening here. It's telling me it's already made a move. There's a lot of accumulation or distribution going on. Something's going on here. When they're done, when the big players are done, this thing's going to explode, either go up or go down. It looks like it's going to break down. Basically, it's weak. This is going to continue down. And look at that. Serious resistance going back down to the bottom of the range. Very possible. That's what it's telling me. I mean, just looking at the screenshot right here. And as you're watching the live market, this is a ticker tape. It keeps flowing. You keep watching these prints coming and going. So it's giving you a lot of clues.
That is something you can use. This is an obvious order that's sitting there, and it's staying there until they are done with the distribution or accumulating. So
yeah,
it's something you can look for. And if it's like nearing the end of your time frame you're trading within, that's something you should respect. This can be used in an algorithm for sure.
Okay, great. Yeah, if it can be used, that would be awesome. Like, for example, over here, look what happened here. This thing came down and smashed right into this level, 403. This level is the previous day's opening price. You know, it's already marked on the chart. It's an obvious one. The software auto marks all these levels. And look at what happened. It hit that level and bounced right away with increased volume. And what you would have seen most likely on the order book is that there was a big buyer sitting there at 403. There's a big bid, a large volume sitting there. That's what would have created this volume and this buying over here. After that buyer hit and got his orders filled, then all this started becoming white prints, where it's basically transacting between the bid and the ask. And look, it's not going anywhere when it's white prints. It's all this. You need market orders to move the market. You know, it's if you're hitting it between the bid and the ask, that's basically the market makers and the algorithms, the high frequency trading, all that stuff. That's not retail guys like me just buying and selling on the spread. You know, so you know that they're active, but this already gave you a clue of what's going to happen. It's amazing how many opportunities there are, basically. This was an obvious resistance at the open, you can short it, fine. And then as you're in the short, you can see that there was a big buyer sitting at 403. So you can expect this bounce to happen. After this, then you can pretty well expect a lot of this is going to happen, a lot of changing hands. The shares are changing hands. You can literally see this happening. So you know that this is going to be an area of interest. And one by one, it's revealing the story. Bit by bit. The story started here, looking at a 30-minute chart about half hour before the open. You can look at this. You can plan this trade. You can even plan this. And here's what's funny with options. If you're aggressive enough, you can, as soon as it sells, as soon as this buyer buys everything here, you can sell call options, sell like the 402.50, sell it and hold it because time decay goes in your favor. And you can also sell on the other side, sell just above VWAP 405. So the longer it sits here doing this, the more time decay is working in your favor. You're just collecting premium. Now that's a strategy too. Now it's very difficult because it's all 1-minute chart stuff. I don't do it for a good reason because it's 1-minute chart stuff. I've done that on a bigger time frame. You can sell options down here. As soon as you see this bounce on this day, and then again here, or even just this one is enough, you can sell the 400 call option. You at the same time sell the 407. As long as the price is sitting here, by the time your contract expires in a couple of days on the Friday, you collected all the premium. So you can do that stuff. Now, those are more like condors and those regular option strategies that you hold overnight. I've done a fair bit of that. Yeah, if you're inclined to do that stuff, do it. I don't know. There's a different risk level and you have to tie up capital to do that sort of thing. I mean, but there's ways.
Yeah, I have a question. I mean, you're looking for the gamma also, yeah? I mean, right? So, I mean, if you would have not 7 DTE, but 0 DTE, what would change basically? Why are you not doing 0 DTE and 7 DTE?
See, 0 DTE, if you're selling, there's not much left to go. You're selling it at 50 cents and it'll go to 0. So you'll collect your 50 cents. If you're doing 0 DTE selling.
Selling might make sense, basically, much more than buying, right?
Well, it depends on the setup. Like in this case, you can make an easy case for selling. You can sell call options below 400. You can sell put options above 407 up in this area. And the price just sits here for a couple of days. And, let's say you give it 3 days till expiry, for example. You sell it on Wednesday, expires on Friday. Well, you collect the premium and the only risk you take is 3 days of overnight risk. Now, you can do that. Remember, the less risk you take, the less reward you get. So going 0 DTE or close to 0 DTE, you're basically minimizing your risk in that sense if you're selling. And so you're less likely to collect a high premium. Whereas if you sell it like a month out, 1 month expiry, you're selling a $10 contract instead of a 50-cent contract. $10 makes it's a lot more premium. So there's all that to calculate if you're doing it. Now, gamma, the only way I take advantage of it is by going long options contracts. Basically, I like it to go, gamma goes up if it goes to the strike price. And that's what I'm doing with this 1-minute trading stuff.
Yeah.
That's where I take advantage of gamma. Now, the other Greeks, I haven't really studied them too much. There's delta and theta and all that stuff. You should calculate those things if you're doing condors and iron condors and selling contracts and you're selling spreads. And that's a whole different ballgame. And yeah, lots of people do that. Again, that's more traditional way of using options. Me, I've just kind of figured out this way of doing it my way, where I'm in and out within 15 minutes and I don't have to think about it much more. My work day is, half hour before the open, let's say half hour after the open, 1 hour, and that's it. So it works out.
You're working 2 hours a day, basically, a bit, yeah? In between, you don't do much.
Oh, I sit on the beach, man. That's work too.
You have to be zen to do this. You need to be in balance. So
exactly.
it's all part of the work.
Great.
Yeah.
And you can do it whenever you want, basically. You can also skip a day or two, basically, yeah? If you
If you make that amount of money, I think you can do that.
Yeah, you can. I mean, I skipped all of last week when we were at the conference. I didn't trade at all. I traded yesterday for the first time in like 2 weeks or something. And I'll trade again today. The thing is that, so the trading itself takes me about an hour, but I do spend 5-6 hours a day on lots of mentorship and webinars and live trading within the community, answering questions. So like 5-6 hours of my day just goes into mentorship stuff, basically.
Basically teaching newbies like us. Yeah.
Sharing whatever.
One can contact you basically and talk about mentorship or training or stuff like that. Yeah, right? Or through Twitter or how?
Twitter is the easiest way because it's easy to respond. It's much faster than email. I can't type. So Twitter is it's quick and easy. WhatsApp's the other one that's quick and easy. So a lot of my mentees, we communicate that way. Like we share screenshots, they're asking for feedback, whatever. And then doing these one-on-one mentorship sessions, it takes a lot of my time. So I'm pretty exhausted by the time it's 5 p.m. in Dubai and I have to start trading. Like some days I'm like, you know what, I'm not trading today, just tired. And you really have to be in a good mental state to do this stuff. If you're too tired or something, you didn't sleep enough, you shouldn't be trading. But I know people like it looks like it's easy, just 1 hour a day. But as you said, my trade book or my trading game plan is a 24-hour game plan. Every 24 hours, I have a full thing. I have to sleep well, I have to exercise well, I have to take care of my nutrition, I have to make time to go play the guitar, to get my head in the right space. I mean, you got to have a decent, healthy lifestyle so you can be emotionally healthy. And then you can tolerate volatility. And that took me a long time to learn. At first, up front, I was making a mess of my account, just trading. And I realized it's not really technical stuff that's complicated. This is quite simple. What's complicated is managing the human being, but not managing the market. The market's easy.
That's where algorithms come into play, I think, to cut out the emotions and just do the pure trading technical stuff. And you can do it like a semi-algorithm there, where you have some kind of human involvement still, but like the major decisions, easy, fast decisions are made by an algorithm. Because this is happening really quickly. It's all like in a few seconds, you make decisions on a lot of data information that you're used to evaluate in a very short time, but an algorithm can do it even faster and execute it faster than you do. And it's very limited time frames as well. You look only 2 days back, and I think it's very well defined what you're doing. It's a very defined strategy, and it makes it quite easy to it makes it possible. I won't say easy, but it makes it at least possible to transform this in an algorithm.
Yeah. So sorry.
Go ahead.
I have a question about the personality. You mentioned that at the beginning, Avi, that you said, first of all, one is to find out what type of personality are you? Are you for the fast trading or what you want to do? And then you have to define the trading style, right? So you explained us now what you are doing, but I mean, how do you deal with different people that come to you? You feel that their personality doesn't fit to this style. Do you have another style then? Or, I mean, how do you do it?
Yeah,
Or
so
you change the personality, basically.
oh God, no. I'm not gonna go screw with people. No, that's a very good one. A lot of people do come to me asking to learn my style. Like I said, I can teach that to you in 10 minutes. That's not difficult. But what's important is to firstly identify the personality traits of that person and then develop the style around those personality traits. So, the centerpiece of their trading style really needs to come from their personality traits. Now, if you see, let's say a person has 10 personality traits, 10 tendencies, you put them all out on the table, you define them, you write them down. In 5 of them or 3 of them are really productive for their trading. They're able to perceive certain things a certain way. And when they see that, they get triggered to take certain action. And if that turns out to be quite a productive thing in their trading, it takes good action, makes them profits, then that needs to become the centerpiece of their trading. That's the advantage in their trading style. Now, at the same time, they have these other traits in their personality that triggers them into destructive behavior. For example, holding past your stop loss, like I did there when I married a trade. Or, over trading, once you make a loss, then you go in heavier size on the next trade without thinking if it's even going to be a good trade, and they lose even more. Whatever the triggers are. For those personality tendencies, you got to put rules in place to make sure you don't fall into traps. Like, for example, if that person is very emotional about losing, okay, well, then I might suggest a rule like, after you lose one trade, go walk away, put a timer on your watch, 5 minutes. You're not allowed to trade. Come back in 5 minutes. And you got to go outside the office. You can't be in here for 5 minutes watching the market. You got to disengage. And it's a 5-minute thing. Because now that psychologically resets the person. And now they can come back. So that would be a rule so that person doesn't fall into the trap. And I've done that for a lot of people, like making sure they do these kinds of things.
Great.
And so in the end,
that's really interesting. Really interesting.
Yeah, it's very psychological. So in the end, the trading style that somebody may use, even though they may have worked with me, is completely different from my style. Completely. It's based on their personality. So in the end, the trading style that is sustainable for you is the one that is a reflection of your personality, not something that was imposed upon you by Avi or somebody else. It's got to be a reflection. It's got to come from within. And that's when it's sustainable. Because when it's really coming from within, you're not fighting it. You're not stressed out for an hour before the market opens. Am I going to make money today? Am I going to lose money today? You freak out. You know, it's not like that. You show up and you're excited to just kind of sit there and be yourself. You know your rules and you know your tendencies. You know, and a lot of times I suggest many different exercises offline that people should be doing to work on some of their weaknesses, like meditation or some other things for resilience or discipline. I do a lot of that kind of work. Most of the work I do with people is actually not even technical trading stuff. It's more psychological and becoming more self-aware, which then reflects in your trading. And that's
great. And I have a follow-up question, if I may, Avi.
Yeah.
What do you think a person should bring when they come to you, basically? What is the kind of bottom line where you say they should have done this and this, or they should have bring that kind of qualification or skill, basically, when they come to me? Then it makes more sense.
Yeah, well, the biggest one I always tell people is don't come here with a get-rich-quick attitude, even though it looks like it. You come to the stock market, you think day trading, leverage, options, $1 billion a day. Yes, and it's available. You can make $200,000 in 10 minutes without too much fuss. It actually is. I know people who do that. I work with these kinds of guys. They're amazing. But you come here expecting that, you're going to end up in a lot of trouble. I won't even talk to you. Like, please don't waste my time. So that's an attitude thing. That's probably the biggest singular thing. And the other thing I always like to suggest is really give it a go by yourself. Not by yourself, but I suggest a book, join a community. And within that book, there's like 10 different strategies that are very simply and plainly outlined. And just in the simulator, like paper trading, give it a go. Take screenshots like I've got here and see if you're able to perceive those price actions and those levels and those things that were just outlined. It's like 5 rules to that style, to that trading strategy. And screenshot everything. Take a lot of trades, you know, for 2 months, 3 months. Just start getting familiar with interacting with the financial markets. Once you get a little bit of that, you know, what's fun is then when people like that come to me, I look at their screenshots of what they've been doing, like screenshots like I'm showing you here. They'll bring theirs. And very quickly, you can identify the strengths and weaknesses in the personality. Like, for example, this screenshot on the screen right here, you can see there's one weakness here. I married this trade before the market opened. And I got myself into a big hole, right? So there's a weakness. I see a lot of people doing stuff like this. So immediately I'll start working with them. Like, okay, we have to talk about risk versus reward. You got to become more aware of that. Asymmetric risk to reward, even when you're wrong. And you will be wrong. It's a part of your personality. You can see it right here on this chart. Okay. So now you got to really practice the discipline to stick to your stop loss and not hesitate when it gets there. If you can't do that, then you don't deserve to be trading. You know, I'll tell them stuff like that. So, you know, just on a screenshot, a lot of times it's very revealing. You know, I can show you other screenshots where you can see there's 10 executions in and out, in and out, in and out. People are getting in and out of trades. Like, what's going on there? Well, they're working with a lot of fear. They fear that the thing is going to go and they're going to miss it. But then the moment it goes even 1 cent against them, they have fear that they're going to make a loss, so they get out right away. Over here, what's happening is the person is far more volatile than the market. The market's doing nothing. It's just sitting there. These guys are just getting in and out of the market, buy, sell, buy, sell. And it's because of the emotional volatility. So then I'll sit down and teach this guy meditation, like 20 minutes a day. This is what you should be doing. Here, I'll do it with you. And, you know, we'll start practicing that stuff, just cooling off the personality. Then you're in a more stable place to go and do this kind of work, this kind of work. So
you need technical skills, basically, and also particularly manage yourself, basically. That's the thing. Manage your own emotions. Yeah.
Yeah. So, you know, here's what I like to say. Emotional intelligence is probably 90% of it. 10% is technical.
Wow.
You can see, I mean, I just showed you like 5 or 6 of my trades in the recent couple of weeks, and there's nothing more to it. All my trades are like this. This is it. This is all I do technically. But the majority of the work, you can't see it on the screenshot. It's the emotional management stuff. It's the discipline in the gym every day. It's the wake up at sunrise every day. It's all that stuff. It's the eating, having good nutrition every day. You know, it's making sure I don't surround myself with all kinds of people who are full of fear and in the rat race and all that, because that'll rub off on me. So I'm very careful about who I keep in my company. I stay in the house. I don't go outside.
So surround yourself with good people, same vision, ideas. Yeah. Basically, live healthy and are balanced. not
Yeah.
chaotic.
Well, put it this way, if surround yourself with people who have what you want to have or who have achieved what you want to achieve, because those energies will rub off.
Yeah, that's true.
Think
I
the way
realize that.
Yeah, it all rubs off. So, you want to be in a crowd, you want to be a big thinker so you can think of thousands and hundreds of millions of dollars rather than a few $100 at a time. Then surround yourself with people who do that. And you start just rubbing shoulders with those kinds of people and it rubs off, just being in the room. You don't have to go and write notes all the time, just be in the room. That's all you got to do. It rubs off energetically. So,
Avi, are you using interactive brokers or which platform do you use?
Yeah, I use interactive brokers. What you're seeing on the screen here, this software is DAS, D-A-S, DAS Trader. But I linked it to interactive brokers. When I hit the buttons here, it immediately executes on my brokerage account. It uses the buying power from there.
Any lag there or not really?
And what, sorry?
Any lag with execution or
Oh, no.
No.
This is
The buttons are directly to your IBKR connected, and this is just a visualization front DAS Trader that you're using, or
exactly. Here, I'll pull up my DAS Trader now. I'll show it to you. It's I love DAS Trader because it's the executions are the whole point. It's actually purpose built for day trading. It's not even built for options trading, but I just kind of use it. But the executions are what's amazing. It's faster than even directly in DAS Trader. So in my experience. So I don't even bother with DAS. Everything happens here sorry, I don't even bother with IB. Everything happens here in DAS.
The trading Ferrari, yeah.
I don't know, man. I'm just trying to make a living here. That's about it. If it works, it works. All right, this is DAS Trader. This is live right now, and the market's closed at 6:14 in New York. So yeah, this is it. I've got my hot buttons here: buy shares, short shares, long number of contracts, sell them, whatever. This is basically the montage where the hot buttons are. This is the order book. I can scroll down, see where the bids and asks are. Look, there's a big ask sitting there at 886. Where is it? Yeah, so up here, 886, just about here. Looks like that level is going to get retested pretty soon, probably before the market opens today, in the next couple of hours. What else do we have? Oh, look at that. Closer to 900. Okay, here's my plan already today. If NVIDIA holds in the pre-market above the black line, which is yesterday's close, if it closes above it before the market opens and holds above, and there's a possible opportunity to go long as it bounces off yesterday's close up through 890, 895, and 900 being the big target.
You have a nice wick there by a nice hammer, and then also slightly lower low, which is also kind of a divergence pattern. So
there you go.
Makes sense.
So, that's it. That's the plan. If we zoom it out a little on the 30-minute, let's make it bigger. You can see 900 is approximately, there's a head and shoulders thing here. It's approximately what was a lot of interest yesterday. And it struggled right about to 895. So definitely take profits here at 895 because it may not break out, because you can see there were sellers here 2 days ago, big ones. Look at that. That's a double top. It shot down from there. The bottom of the range is here firmly, which is already bounced 2 hours ago. And yeah, this is a high conviction trade. If the 1-minute chart after the open proves it or confirms it above yesterday's close, this could go. And so when the market opens, also before the market opens, you want to look at the order book, make sure that there is liquidity up there for the market makers to move the price to there. Right now, it's showing plenty of liquidity as compared to the bid side. I don't see much liquidity, but still, I mean, it's still a few hours from the market. The market opens at 9:30. It's like 3 hours to go. So things will change. So that's only NVIDIA. But anyways, this is the platform. It's very simple. As I take a position, it shows itself here. I put my orders in, it shows here. Here's the tape. It's very simple. I mean, it's not much to it. So, yeah.
These buttons to the right, you can define yourself, actually. That's completely custom made.
Yeah, there's a script. So like this one, I have just put the edit, and here's the script, the route and everything. So it just gives me 25 contracts every time I click it. That's all.
This code can be looked up somewhere. What kind of language is this?
Yeah. You know what? You should check out. Actually, our YouTube community has a lot of information already out there. Just look at DAS Trader YouTube or DAS Trader Scripts YouTube. You'll find our community. Yeah, you'll find BBT, Bear Bull Traders. That's ours. That's our channel. Everything's on there. I mean, it's shocking how much information there's. There's some really sharp guys in our community who write these scripts and complex scripts and stuff, and it's pretty amazing. The scripts I use are like stupidly simple. I can't do more complicated things than this. But
you don't have to change them very often, so you have them once and use them for a long time. Yeah.
Yeah, I barely change them. I mean, these top ones they're for equities. If I'm going long equities, 1,000 shares or short 1,000 shares, I haven't used them in maybe a year. They're just sitting there. I've been using these because I'm doing contracts, options contracts, long 25 or 50 contracts or whatever it is. And this is just there. I don't even use it much. Just buttons to buy and sell. So it's actually very, very, very useful platform. I like it. Let's look at Tesla yesterday. That was fun. This thing just ripped. Check this out. In the pre-market yesterday, remember I was saying it held at 169 level, it dropped, and then an hour after the open, it closed above yesterday's what was it, opening price? Was it, where the hell was that? Yeah. Gosh, I can't even see. Oh, right. This is yesterday's open. This is yesterday's action. That's why. Okay. Look, this was the opening price yesterday, right here. It dropped, it claimed above. As soon as it closes above on a 30-minute chart, you can even go long here, stop loss below, and you're in the business. And you can have a target in the 175 area, big round number. There was previous interest there as well. Look at that, 175, big round number. I mean, you can trade like this on a 30-minute chart too. Yeah, lots of people do that as well on slower time frames. I used to trade 60-minute charts not long ago, maybe a year ago, a year and a half. Yeah, nice and slow. You just put the order in and come check it out after a couple of hours, really. So yeah, there's a way to do that too. Right now, though, I've evolved to do it this way, the 1-minute stuff. It's just easier for me. I like it, less stressful. Once I put the position on, I like to get in, get out, and be done with it. Oh, look at that. Amazon wants to go down.
Yes, head and shoulders.
Yeah. Well, you can see here it was a top. It made the move down. It found the bottom, which was, also an area of interest previously, but this was the bottom. And now it's pushing down against the bottom and it's not getting pushed up yet. So if this closes below the red line, this bottom of 2 days ago, it's a possible call. Or if it closes above yesterday's close, this could be a long. So it's already showing you opportunities for when the market opens in a couple of hours. So, I mean, but I'm not so convinced of the long because
you don't have a good target there, no?
Yeah, 175 is pretty much where it's going to stall because look, that's where it stalls. Look at that. Here was support. Here it was resistance. Here it was resistance. Again here, 175. So if you're going to get long 174.50 to 175, it's not much of a move. It's not worth risking your money. The bigger potential is to the downside. And like you're getting targets in this area. 172.50, 172, like this area.
Avi, you have always one trade at a time open. I mean, you have one underlying. You don't do parallel stuff basically, yeah.
Yeah, I have a weakness with that. I tend to get into more trades than I should simultaneously. So again, another trick that I have. Again, now this is really important. It comes down to your personality, right? Because I know I can be very aggressive, get excited, and get involved. So one rule that I've put in place that stops me from doing that is I actually maintain a decently small day trading account. So I've used up my buying power. I don't have the ability to get into a second one. I have to sit with the one I'm in. So again, a little hack, a little cheat. It's one of my personality weaknesses, but I found a way to cheat the system, which is physically I can't put more money into it today. I've transferred it and it'll be here tomorrow. So
but that means also when you put all your margin potential on one trade, basically, then your diversification is low, basically. Yeah, so all in one trade with a full margin, that can happen, right?
Yeah. A lot of my positions are pretty much full buying power. Because again, I don't maintain a very large account purposefully. So a lot of my trades are on most days I use full buying power. Sometimes I'm able to get into 2 or 3 positions at a time, but it's not so common. But you've seen also like when I'm in a position and I have to get out because it's not working, I'm out within a minute, usually. That quickly then opens up my buying power to go into another one.
Yeah, you need full focus in the strategy as well, I think. I would never be able to manage more than one position if you're like in these time frames trading. That wouldn't work. If you do the 30 minutes ones, then you can have probably 2 or 3 trades open and spread your risk. But this is not a strategy to have more than one trade open, I think.
Yeah, and so again, that's a really good point. That comes down to your personality. If you can't handle it emotionally, handle the risk, then don't do it this way. Do it another way, like a 30-minute chart or a 5-minute chart, whatever. And the thing is, if you're doing it off a 30-minute chart, then generally speaking, your stop losses will be further away, which also means you got to take smaller size. But it also means you're working with a 30-minute candle. You're probably going for bigger moves. So yes, in that case, you are using less buying power per trade, and you can involve yourself in 2 or 3. So yeah, if that again is suitable to your personality traits, then that should be the centerpiece of your trade book.
That's how you
If you
started actually, Avi, right? I mean, you started also with a longer time frame and then you came to 1 minute.
Well, actually, what I did is I started with just the suggestions in the first day trading book I read, which was 10 different strategies, all of them on basically a 1 minute and 5 minute time frames. And so I traded a lot on that stuff and slowly figured out which styles are not working for me, which styles I'm better at, and then evolved the ones that I'm better at, to the point where now it's been 5 years and I've evolved into a 30-minute chart, which is actually quite a rare one. Most people don't look at a 30-minute, they look at a daily and the 5 minute and the 1 minute. Me, I just look at 30-minute as a primary and then execute on the one. And yeah, it just evolves like that. You gotta just make sure you don't quit in the process. So you're learning a lot up front, trying a lot, paper trading a lot. And after paper trading for a while, maybe 6 months, 3 months, whatever it is for you, go live with small size, risk $5, $10 per trade. You don't have to go big. So that way you'll get the feel of what it is to put money in the market, get the feel of, can you still perceive it properly when you're live with live money? Because then your emotions are more at play. And then slowly evolve it. And again, I've been really lucky. Like I joined this community, just like we have with the investing community. I've joined this community for day trading in 2019, and it's great. I mean, the guys are great. I'm still with them now. I'm a moderator in the community too. Through it, just learning from everybody, all the senior guys and all the other people in the group. It's if I was sitting here doing it myself, it would have been a different story completely. Sitting at home looking at my airplane and day trading.
So what's the minimum account you suggest one needs basically when you say $5 a trade only, very small, can be like 10,000 or what, or 20,000 or what should be the minimum?
Well, for Americans, you're not American. There's a minimum amount is $25,000. Below that, you're not allowed to trade, the pattern day trading rule. But yeah, I mean, you don't need to take you might need to take, let's say, 100 shares on something like Amazon, which is a $175 stock. So it's not a whole lot of buying power, you know.
Okay.
Or if you look at the more expensive stock here, like where is it? Nvidia here is a $900 stock. So here's what's funny. Check this out. Let's say you're trying to short it from here. You get in at 884. Your stop loss is 885. Okay, so tight. That's $1. So how many shares can you take to risk just $5? Like 3 shares? I don't know. It's short just a few shares, not much at all. So yeah, you just calculate it based on your stop loss. Yeah, and anyways, I like to recommend keep your day trading account at a minimum. At least for me, that works. Keep pushing cash out of your day trading account.
What's a good rule to start with percentage-wise of your liquids assets, like for day trading account, just to not blow up or get too emotionally involved to start with?
Yeah, that's different for everybody. You got to notice what is an amount that is, let's say, it's not so small that it's meaningless to you, and it's not so big that it freaks you out. And again, for everybody, that's different. For some people, that's a couple $1 million. For some people, that's $10,000. So
Right.
what can you manage at your fingertips? Because once you're in it, it's at your fingertips, in and out with these hot buttons. And if you know you have $1 million at your fingertips, can you manage that?
Nope.
There you
go. It's a growth process.
So that's
probably would start with like €1,000 or something, but I don't know if I can buy enough contracts with that to make it, possible to trade.
They trade with paper in paper trading anyway. Set your account to whatever, $10 million, whatever. It doesn't matter. It's paper trading. And just get used to the technicalities of it a little bit, which is the easy part. In a couple of months or a month even, you figure that out pretty quickly. It's the emotional volatility stuff that's far more volatile than any equity I've ever seen. I promise you that. It's always the emotional side. Always, 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 always.
Hey, Avi, do you use footprint charts or not?
I haven't. I haven't. I've been exposed to it. Some guys I know, some guys I work with, they use it, and it's amazing because it's candlesticks with the tape inside the candlesticks, and you can read it that way. It's kind of like all in one space on the screen. You don't have to move your eyes. It's all there. I haven't really given it a fair chance. I haven't tried it. I'm not even inclined to try it because I'm so comfortable now with my setup the way it is. I don't feel like it'll probably take 2 months of practice to learn it, but I don't see what benefit I can get out of it today. I'm not really struggling with something that maybe that can help with. So when a problem comes up, if I see that can be a solution, then I'll explore it deeper. Well, that's kind of where I am with it. It's again perception, right? Everyone's different. I trade on these 30-minute charts and stuff. There's people who cannot look at this. They look at the footprint charts, and they trade the same kind of sizes and contracts and I do. We take the same trades all the time, but we're looking at it from totally different angles. So again, personality traits are incredibly important. Once you identify that, then you really know where you're going with all this. Yeah. Let's see. Yesterday, Google had a good run yesterday. Look at that. Yeah, right at the open. No, I missed this one. I wanted to do this. Right at the open, well, look at that. It was very strong pre-market, bounced off of what was it? I don't know what it bounced off of. Really nothing. But it was holding 150 as resistance in the pre-market. As soon as it breaks out of 150, boom, straight up to 153. This was a great trade. I was looking at it, but I missed it because I got involved in Tesla at the time. But this would have been like a $20,000 trade, man. To get contracts from here up to there, or even up to 152 would have been massive, massive trade. A lot of people.
Yeah, sorry, Ivy. Sorry, continue.
Yeah, let me see if I can get the data on this for yesterday on the 1-minute chart. Yeah, it looks like we can. Let's zoom out. Yeah, yesterday's 1-minute chart on Google. How fantastic. Look at that. So that's the resistance line, 150. It closes above it. That's the opening price. It closes above. As soon as that closes, you can enter your stop loss right below VWAP. Boom, run this thing up. This was such an easy trade yesterday, which I had it on my list, on my watch list on the side screen, and I missed it. So you can't enter it here because your stop loss has to be down here. You're missing out. You're missing risk to reward, and this is how you blow up your account. Don't ever go chasing it. Either you take it or you miss it. That's all there is. Maybe algorithms would have taken it if you program it right. I don't know. So that might be an advantage.
Interesting. And if you look at the chart today, it looks like it's consolidating in a very narrow range, so it's probably preparing for a big move as well, to be honest here.
Well,
what would your first? I would even think it's going down here, but that's just a first feeling.
There's two theories. One is it's already had a big run up, so everyone's selling, so it's going to come down. And what technically it's holding below yesterday's closing price at the moment, below this black line. So yes, it could drop. The other way to think about it is it's had a big run up. Lots of people missed it. Now this gapped up. There was some news, some AI news or something or the other. So it gapped up and a lot of people missed the boat. Now it's cheaper than it was yesterday. So people are buying and off it goes. So there's two ways to think about it. If I'm going to make a plan for this, I'd say it's going to be short below yesterday's low, the red line here. That's yesterday's low down there. If I'm going to go long, I'll only go long above 150. If it goes, it claims, it closes up here, then push through to yesterday's high. Again, remember trauma. Yesterday's levels are more traumatic than previous levels. That's why they're more important. So it has to really claim all these levels, and 150 was an important level yesterday, and then yesterday's high. So I'm going to play between 150 and 153 if it comes into this area before the open and it starts to set up in this area. Right now it's setting up down here, and also I want to see an order book. I want to see lots of liquidity down here, lots of buyers waiting at 146, 145. So let's look at the order book right now. I'm looking at this side. These are the bids. There's some bids 147. I'm really interested in 146 area. Look at that 146.
That's a big one. Yeah,
right there. So 146.50 is a potential target for a short. And I'm not seeing anything at the moment below that. And now if you look at the long side, getting up into 149 and 150, you can see there's bids up there. There's asks up there. So there's liquidity.
You have to clear them, those, because they're in the levels in your range you want to clear first before even considering a trade.
Yeah, I want to have this totally cleared out and then see more liquidity above, which at the moment it's showing. It's showing 152. And look at that above there as well, above one. So, I mean, overall, just based on the order book, it looks like it's strong.
Yes.
But
yes,
technically on the candlestick chart, it's not. So it's a contradiction.
It looks weak. Yeah.
Right now, there's no trade on it. There's no way I'm going to touch this because I'm getting contrary signs. It's too much risk. So we got alignment. Yeah. What do we have here? Oh, yeah. Look at this mess. Volume right now. Okay, it's early, so there's no volume. Look at this 1 minute chart. You can tell. That's no fun. See something that's actually working well. Oh, yeah. Microsoft had another big day. Was it? Yes, I remember that. Oh, this is another one I missed. You see how many opportunities there are? I was actually upset yesterday. You saw I took those couple of trades, made like 2 grand, but I missed a 20 grand day because I missed that Google trade and this Microsoft trade. This was so amazing. Had a top, what went up, made a top, hit a bottom, and before the market opened yesterday, it hit the same bottom, and it was strong right at the market opened. And you could have taken this long right in this area, 414. This would have been a primary target where there's resistance about 417, and then you get bonus up to 420. I mean, this is a $20,000 trade right here at the open yesterday. But I just missed the whole boat. It was amazing.
But here, in this case, you have to open like right away. It's the first candle of the day, just bomb, and it shoots up. You have no confirmation whatsoever. You cannot wait for the candle to close, or...
Check it out. This is a 30-minute candle.
Ah, okay, sorry.
Yeah.
Ah, okay, sorry. I thought I was looking at the 1 minute. My mistake.
I'll show you something on the 1 minute that's interesting. Hopefully it shows here. Let's see. Okay, this is fun. We call these opening range breakout. Basically, look at the tremendous volume you have at the first minute. Okay. When you have tremendous volume all in one area, that area becomes important. And then you're looking for a breakout from that area. So this is a high right here of this candle. This is the low of this candle. If it breaks out from the area where we made a high and a low, because there was so much volume, that's pretty explosive. Same thing on the short side. That's the whole thinking of the opening range breakout. So even if you're day trading and you're not planning your trades on a longer time frame or anything, you can just watch price action on the 1 minute chart. Look for the opening range, and then look for a breakout, long or short. Get the confirmation from the liquidity levels, order book, all that stuff. In this case, it made a beautiful breakout to the top side. And here, I'll draw a line for you to show you this. This is something I like to do quite often. Check this out. So this was the top of the range. Here's the breakout trade, and look, with some increased volume, breakout. So you're convinced of the breakout. Let's say you missed it. It went, it's up here, and you're like, oh crap, I missed it. Well, what happened? It came in, retested, came down even a little bit, and bounced right off. You can enter on the retest. You really have about 3 minutes of opportunities to enter, which is quite slow. Really slow. You enter here, just put the stop loss below this candle right here with the breakout candle. You're in the trade already. And this is pretty big. This thing ran up to what, 420 eventually. Where'd it go? Yeah, there it is, right about there. Look at that. That would have been an ultimate target yesterday. So this trade, again, I missed it because I had my eyes on something else, on Tesla and stuff. But Google and this one, if I was looking at this would have been a big day. So that's a very, very typical technical strategy. Basically, look for an opening range, a breakout of the range. If you missed the breakout trade, you missed the entry, no big deal. Wait for the retest. It happens 90% of the time, or let's say 70% of the time, really. You get a nice retest and it goes, and you have your targets in mind. So that's a very common strategy for day traders, trading opening volatility and momentum and all that. I use it all the time too. Because a lot of times the plans I make on 30-minute charts, they don't work. So then I flip over 5 minutes later and I get into some sort of breakout trades like this. So Amazon did one yesterday, actually. So yeah, that's how you can use this. So there's, again, millions of different strategies. But the one that's sustainable for you is the one that's a reflection of your personality.
I like personally breakout trades because they give a lot of confirmation, and the retests often work very well.
Yeah, they do. Retests are great because by the time it's done a retest, you have so much confirmation. You know what the range is, you know that it's broken out. Finally, so by the time it's here, it's done all the stuff.
And you know the direction for sure where it's going. Yeah, just follow the momentum. That's the ones I do most of the time, just when trading cryptos. But yeah.
Yeah, awesome. That's great. It's a very straightforward technical setup. And yeah, a lot of people do it. People do it scalping most of the time. I do options, so I like to try and get in here somewhere for the long based on the support on a 30-minute chart, like the support in this area. So I'm getting that kind of move. So, but that's just my style. That's just my personality. I'm just, I guess, a lot more aggressive than most day traders. So, but the breakout and retest stuff is great because the confirmation is amazing. You get a high win rate when you do this. So that works out.
Avi, do you keep a record, basically a written record of your trade actions that you can later on revisit and take conclusions, or you don't do that anymore because you are now a professional?
I don't really do that anymore. I still have the subscription to all these trading journaling softwares, which automatically imports all my trades and gives me all kinds of statistics and stuff. I haven't logged into any of them in like 6 months. I don't really know. But actually, my real trading journal now is my Twitter account, and it's public information now. So I plan my trades before the market opens, which I put on Twitter. And then when I'm done trading, let's say 15 minutes, half an hour later, I put the results out there too. Like all the trades I showed you, I just pulled it right off my Twitter account.
So basically, the purpose of the Twitter account is that you give signals to the community. So someone like a newbie to this thing basically can use your advice basically of jumping on the same trade in principle, right?
You can, but that's something I discourage. It's it's funny, it's contrary. Yeah, so yeah, you can use them as signals, you can use them as setups. What I encourage is look at it and then go investigate it yourself.
Like
See,
inspiration, basically, right?
yeah. If it makes sense
Just an
to
idea.
you, if it makes sense to you, then risk your money. I'm not gonna say I'm gonna put my money here, so you should too. That's no way. I'm not even legally qualified to say that. So it's not that. It's just more just sharing with the community. And use the ideas if you want to. Don't use them if you don't want to. Definitely don't blindly copy because that'll run you into
Yeah, no,
loss.
that's clear. That's
My
clear.
risk appetite is very different than most others, and my read on momentum is very different than anybody else. Like, my reasons are very unique, and nobody on Twitter would even know what my reasons are for why I'm looking at it that way. So everyone's got their own perceptions. Again, my eyes are different from your eyes. Everyone's got different eyes. You can't just blindly copy. It's going to run you into a lot of trouble. I made that mistake when I first started. I blew up a lot of money just copy trading. That's one of the first things all the experienced guys will tell you. Don't copy trade. That's how you find trouble.
Yeah, I was asking because I told you I think before that I'm in a guided group basically where we do 30 DTE trading, bull put spreads, and there's a signal service basically. So it's super slow motion in terms of what you're doing. We are selling basically. And that's basically how the trades are used. But if you don't get in the same minute when it's posted, then your situation will be already different one. I'm trained basically how you use the delta. So I'm basically focusing on the theta here, basically, to earn theta as someone who is short selling, basically selling 50% of my account as maximum margin. So it's 15% of the total available margin. That's what I'm doing basically. So this could be a good diversification. I mean, what you are doing is totally different basically by risk profile and by everything than what I'm doing as an underlying with the SPI and with the DAX 40, right?
You can do that. You can. The thing is, as much as we talk about like automation or algorithms and can make it really precise and you can copy experienced guys, it's kind of the same idea. Really, in the end, it's gotta make sense to you. It's really gotta make sense to you. You don't put your hard-earned money at risk when it doesn't make sense to you. It's amazing. Like, you can't tell somebody who's a vegetarian to go and cook a steak on the barbecue and eat it. It's not gonna work. Just because I like steak doesn't mean that person's gonna eat it. That person's gonna throw up probably. So that's the reality of it. And I don't know. I've been exposed to a lot of these algorithms, as in a lot of people talk about it. Here's the funny part. A lot of people come into day trading and within 2 years, they've blown up all their money. They don't know what to do. In a desperate kind of attempt, they go and talk about algorithms, or they even hire coders and do this, and they have a tech background. So they do all this, and then they come back and they lose even more money because the market cycle has totally shifted and the market behaves differently in a different way. I mean, in March 2020, when COVID was announced in the US, the whole thing crashed. And there was algorithms trying to go long all these stocks. You know how many hedge funds blew up? It's just kind of crazy. That's why I don't really know if I can. Yeah, we can say their algorithms are faster and they won't miss the moves that I would miss as a human, but I don't know. I have this ability to be a little discretionary.
I think for your strategy, the good thing is really, as you said, you don't have overnight risk. You're always, at the end of the day, you are out of everything, right? I mean, that's a great thing.
Yeah. Well, here's you want to hear something funny? We talk about mental capital, right? That's very important, as much as financial capital. So you start trading, and then after a certain amount of time, you're already beat up. You're exhausted. You've taken 3, 4 trades, and now you're no longer the same person you were when you first started. So you're a little more tired. Your 50% of your mental capital is depleted, right? Now, for some people, that may be an hour. They can have an hour of stamina. Me, it's about 10, 15 minutes. That's it. You talk about end of the day. No, man, I'm done end in 15 minutes. I really can't do much more. I don't have the ability to calculate and look at the levels and the price action anymore than usually about 15 minutes. If I'm in a trade, okay, I'll hold it. I'll get to target. I'll get out. But I can't open a new position after that. That makes it very, very difficult. So again, down to your personality, right? What's your stamina level like to handle this sort of stuff, to do this sort of stuff? One of the things that depletes me tremendously is the fact that I actually risk a large proportion of my account per trade. So that's quite stressful compared to what is recommended, which is probably 1% of your account. I tend to go 5%. So that itself puts on a lot of stress for me. So then I get exhausted faster. So that's why my day trading time frame is typically 15 minutes, typically. Sometimes if the setup's really good and smooth and it's easy, I'll be there for half an hour. That's that.
You know, that remembers me. I was in Russia. That remembers me how they dealt with Chernobyl. So basically, when the Chernobyl blew up, they had 90 seconds per soldier, basically, to be in the critical zone to do the handwork. And then they get out and hopefully not die from cancer, basically, yeah, because it was too much for them. So that's kind of the same thing here. You have to know what exposure you can basically have without harm, and then basically take a break, right?
Yeah, exactly. And not just take a break, shut down the computer, like pull the plug and walk out because otherwise keep it open. And if you've hit your stamina limit and you've made some losses, the temptation is to sit there and
make it all back.
And then now you're betting, you're not trading, you're betting. And that's a very dangerous thing. That's called over trading, revenge trading, all that stuff comes in. That's a very typical trap for a lot of day traders. Like all of us have got stuck in it many times. And you have these Hulk days where you blow up 50% of your account within 1 hour. It's happened to me a lot of times, it happens to a lot of people. So you got to really, again, know your personality and have your rules in place, which are aligned with your personality. Whatever my rules are going to be very different for any other individual. That's the key. It's a very, very human-based business. As much as it looks like you're just sitting at home and day trading, it's not the technical.
The more I think about this, you learn a lot about yourself. And actually, if you want to do it well, you have to be kind of in control in your way, or maybe synergize with yourself, basically with your inner self. Not try to overthrow yourself or fall victim to these things. I think it's really a journey to oneself also. Yeah, I mean, it's really
it's way more than just the trading. It's interesting, actually. Yeah, I will learn more about myself by doing this.
Definitely. We always like to say in the community, it's like a professional athlete. You really got to maintain yourself, and then you can perform on game day. Or people who play golf will tell you it's not really, you're not playing against the other guy, you're playing against yourself. For me personally, it's surfing. I go do surfing all the time, and my God, that is more of a self-awareness process than it is a technical thing about catching waves and surfing and stuff. It's amazing how much you learn. Think of sports a lot. It's really similar to lots of sports, because you really got to maintain your peak level of performance. That comes physically, emotionally, mentally. Once you do all that, the technical stuff, we all know what to do. Kick the ball, it goes in the goal. I mean, that's easy to understand. But you got to be in that position to kick that football or pass that football. You got to be at top condition. Otherwise, step away. In January this year, a couple months ago, I didn't trade at all. I hardly, the whole month, traded like 4 or 5 days. I hardly traded. I was having, my family was over from California and all. It was like lots of people in the house, and it was this distraction. It was like a family party for a month. So I just I'm not going to trade because I know I'm getting distracted there. I can't focus here. I'd rather just have, festivities with the family rather than try.
Avi, what do you think? How much time does it take on average, or for a trader to become a self-confident trader, and basically where you say, oh, this guy can walk on his own and will not make stupid things, basically big stupid things, let's say. How long are we talking about? Years, or you do this several years already? I mean, when do you reach maturity?
For me, it was about 3 years, and that's because I was stupid. I did a lot of silly things. Okay, I blew up. I went aggressive. I tried to make it back. I did lots of things that you shouldn't be doing. I mean, realistically, if you're disciplined and you're not a teenager, you have emotional intelligence at a certain level as a responsible adult, I'd say in 12 months, you should be confident. And you should have, within 12 months, you should have spent lots of time in the simulator already. You should have gone live and lost some money already, not too much, just be surviving the learning curve. And realistically, you should be well on your way. You should have your direction. Most of the people would have their direction pretty well defined, but you gotta understand that learning curve time, it's different for everyone. It really is a learning curve. You got to be aware that you're doing stuff that you don't know what you're doing. You better document everything you do and revise it, review it, and see what worked, what didn't, and why not. And if you need to hire mentors to help you look at that stuff, then do that as well. definitely participate in the community. I think that's fantastically powerful. All of those things. And I think, yeah, if you are a responsible adult, I think 12 months is very reasonable, really reasonable. You know, just don't be a stupid person like me and just be aggressive.
Yeah, Avi, I gotta go.
Yeah,
I have another meeting. Thank you so much for all
sure.
the explanations.
It's a pleasure.
I will follow you on Twitter and see if you blow up your account one more time.
Sure, sure. Oh, great, man. Hey, it's great you came. I'm glad you could show up and we had this talk. This is good.
Yeah, thanks again. Hey, bye guys.
Hey, bye,
Take
GP.
care. Bye-bye, Jean-Paul. See you in Switzerland.
Yeah,
See
see you
ya.
in Switzerland. No,
Ah.
see you sooner.
We want to make a Swiss meeting, Avi, at one point. We're
Ooh, I
discussing
wanna
it right now. So, Avi, when I would like ours have to go soon, for the lunch break, when I want to follow up, basically, I follow you on Twitter and find all the resources there. You mentioned a book as well.
Yeah.
Can you say which book that was, or
Yeah,
where
I will I'll just WhatsApp it to you. How about that? I'll WhatsApp you both the
Oh,
details.
great. So if you can share some maybe literature or other, say, a video or something where one can follow up basically to get this, I mean, that would be great to warm up a bit. I really liked it. I mean, what you just explained, because I was mostly concerned about the fact that it would consume several hours every day. And I mean, what I understand is, well, I mean, you first of all, you decide yourself when you trade, when you don't trade. And then when you trade and do the way you do it, basically, you do it in the morning and in the evening for half an hour, maybe something like this. You have to do it, and then you can do your other stuff, right?
Yeah, yeah. Yeah, it works great. So yeah, definitely once you find your way, it doesn't take hours and it shouldn't. Most people can't do this for hours. It's not realistic for a human being stamina most of the time. So yeah, it's very you know what the beauty is once you get it working out for yourself, it offers you a lot of time freedom, financial freedom, you know, all those freedoms that you want. Location freedom even. You can do this with laptop and a couple of screens. It's not too fussed, you know, it's not too much trouble.
This is an amazing skill to know, Avi. Really, it's amazing what you've accomplished here. Yeah,
Avi, I have
that's
another
so time
question.
efficient.
Oh, sorry.
Thank you. Then I'll share the resources so you can at least get going in the same place I started from or got going,
Yeah.
same group, the
I have
same.
a final question, Avi. Thank you so much for your time. I have a final question. What was, in your experience, the youngest person you have seen doing this?
Hey, check this out. One of my mentors at the time, he was maybe 22, 23. I was maybe 30 when he was my mentor. I was just starting it. As in, he doesn't even probably know that he was my mentor, but I used to follow his stuff in the webinars and in the chat room all the time. I was asking him questions all day long. And fantastic. Like this guy's brilliant. He's very surgical with the way he does it. Multiple different time frames, looking at precise levels, waiting, so much patience, waiting days for it to hit that level to take a trade, that sort of thing. And he must have been 22, 23, and he was already doing it at that high level.
Yeah,
Brilliant.
I'm asking because I've managed to get my daughter excited about this when I started almost 2 years ago, and
Yeah.
she has passed some short lessons with me. What is option trading? What is a call option? What is a put option? She's 14 years old, will become soon 15,
Oh,
and
fantastic.
she just came to me yesterday and said, "I have to open now an account. You told me this already, and I have to start trading." So she
Well,
likes mathematics. I mean, I don't know. I don't want to push her too hard for this, but if she comes to me, I, of course, think about it.
no, definitely. So I would say to your daughter, firstly, I'll share with you the book in the community to participate in. And options trading, remember, it's based on the underlying, on the equity. So understand price action first, all this stuff on the screen, and then you do options. Like that comes quite naturally and easily later. Once you get really proficient at price action and horizontal levels, liquidity areas, all that stuff, then you can apply it to options.
So learn to read charts basically and understand
Yes.
the price action, and then you can apply that price action. That's a good point. Yeah.
Put it very simply, learn to read candlesticks and volume. That's the primary.
That's the only thing you need. Yeah.
Price action. Yeah. That's what I mean
I've
by
been looking for years at charts already, and it's you can see it right away if it's strong, if it's not, where the key levels of resistance and support are. But you only do it by looking at charts a lot, and just keep on practicing.
Every
It
day.
reads like a book actually, and I think for me it's interesting because this is the next step for me. I think now really executing on this. and trying to exercise that. I know how this price action thing works, but I need to now execute on this.
Mhm.
Yeah, it would be great to have some literature on that price action thing as well, basically, if you have to suggest something, because that's something I know from a distance away, but I haven't done it myself, so I really have to get a bit in it. I mean, I know the candles and these kind of stuff, but I haven't used it. Would be great.
Sure, and I'll
And-
send you the literature and the resources that I think are valuable, as in, again, efficient. You don't have to spend years reading this stuff. There's just 2 books and a little piece to look at. That's it. That's all I've done, basically. And you can just go from there. It's not too complicated. And just a little story. My daughter's today 5 years old, but when she was 3 years old, a couple of years ago, she would walk into the office and tell me the market's going up, the market's going down. Literally.
and she would have
Really?
good picks, basically.
Yeah, she's my chief investment officer now. Buy Okay, great. More energy stocks. No, go short Tesla. Okay. It's really funny because
Oh, wow.
she see this red and white on the screen, It's a little kid with the
Yeah,
colors.
kids, I mean, they are embracing what the parents is doing, what the father is doing, if the
True.
daughter is there. I mean, I think that's pretty great. And our daughter, she passed a course on stock trading for kids, basically, in Switzerland, like when she
That's
was
cool.
11 during Corona. It was in Zoom. And she has her own small portfolio. She's always laughing at me that my stocks are, I'm too hyperactive, performing worse than her stocks, because the best portfolios are the portfolios of dead people. I mean, that's
Yes.
the different thing, basically, we didn't talk about. So that, I mean, if I move into this, I mean, I still have to see when I find my time, but because I'm also busy with the work, but I really love it. I mean, what you just explained, in a way, it was super for me. I would only do it if you would be my mentor.
Sure. Well, that would
Yeah.
be a privilege for me. So no worries. We can work something out. Just reach out anytime. I'm always here. I do it all day long. So, all good
Excellent.
fun. All good fun.
Frederick, what is your next action on this? You're
Uh,
an expert, as I see. Yeah?
I asked 2 days off at work actually, because I want to do this as well, and I think Avi is a great guy. He makes a lot of sense, so maybe I'll try some of his coaching sessions as well. This also was already a very good one actually.
Maybe
Um,
I have one last question. How is your style different, Avi, from Doris? I mean, I had a bit of a chat with Doris. She's working with signals. She's telling me about the VIX and this kind of stuff she's doing. I mean, it's completely different what she's doing, right, than what you do.
Yeah. Again, she's doing it based on her personality, which is very much mathematical. She has a PhD in mathematics, basically.
Yeah.
And so it's incredible levels of calculations and calculus and the VIX volatility, and then doing it that way, which to me is just, I can hardly multiply and add, So it's a lot of, it's a totally different game. And then she does it on a what do you call it, multiple days time frame, where I'll be out within 10 minutes, 5 minutes, she'll be multiple days getting a position, but waiting months to get the position, and then hold it, enter it once the signal comes true, whatever she's looking at, volatility levels and things, and then hold it for a couple of days to the target. So it's very different, very different. Now she's saying she's getting some great results, like 20% per year or something like that, which is great if you're able to cash that out every year. So again, it's very different. I know that I'm not built for that sort of trading, but it makes a lot of sense to a lot of people. If it does, then you should look at that.
What I really
Her
liked
stra-
as well was I'm also buying long VIX calls for my bull put spreads to kind of when the market resets. But she said I'm doing it the wrong way because I'm buying it mechanically, always 120 days DTE every month. So I have a ladder. I have practically four tranches running all the time. One is only expiring, and the other is 120 DTE. And she said you should do it based on signals, basically. Yeah. And she said she got this Corona crash quite well, and that's something I would like to follow up with her on that long-term strategy, basically. But yeah, I know I have a very good understanding of what you are doing, and it's really very very powerful presentation. Really, congratulations to what you built, really, Avi.
Oh,
Deep
thank you.
respect for you.
Thanks for the
Congratulations
privilege.
indeed.
Thanks for the privilege letting me share it with you guys. It's it's an honor. So hopefully we can all find something we like and make sense of, and it works. So that's what's important in the bigger picture of it all. So
Yeah, thank you
Absolutely.
so much for your 2 hours time, and
Yeah,
looking
wow.
forward to get the reading stuff. So it will be coming on top of my list, and yeah, we'll be definitely in touch with you. So
How will you share this recording as well? Because
Yeah.
it's gonna be a long one.
yeah, I'll get it downloaded and sort it out, and I'll send it over. No big deal. We'll
Okay.
share.
Thanks a lot.
thank you
Thanks
very
a
much,
lot.
Avi. I will share with my daughter the recording then.
Yeah.
Absolutely. Absolutely.
She will love it. She will love it.
Yeah. Thank you so much. Frederick, have a nice day, and we are in
Oh,
touch.
Michael, yeah, we should stay in touch though. Yeah. We're
Definitely.
probably gonna go through the same learning curve, so it would be nice to chat to each other while we're learning and trying out
Absolutely.
stuff.
I'm not feeling
Yeah.
too stupid then when I'm
No, me neither.
mean-
It will be the same. We'll find some support with each other
exactly.
while we're blowing up
Avi,
our accounts.
Thank you so much. Have a great time in Dubai, and yeah, we'll be in touch soon, hopefully. Yeah.
Yes, for
Yeah.
sure. We'll be in touch. Take it easy,
Alright.
guys.
Thank you. Good luck. Have a
Bye
great
bye,
day.
Avi. Bye bye. Have a great day.
Bye bye, Frederick.
Bye, Michael.
Bye bye.